All right, so today we're digging into the story of how mining company Hudbay Minerals pulled off an absolutely monster year. But here's the thing, this isn't just about big numbers. It's a really fascinating story of smart strategy, serious operational grit, and a surprising lesson in what happens when a huge success still isn't quite good enough for Wall Street. Let's just start with one number, $1.06 billion. That was Hudbay's adjusted EBITDA for 2025, a company record. And honestly, if you can understand that one single number, you're on your way to unlocking their entire story.
So, how in the world do you get to a billion-dollar record like that? Well, it wasn't just one thing. Nope. 2025 was a year where it felt like everything just clicked for them, starting right at the very top.
First up, just look at the revenue. The company pulled in over $2.2 billion, a huge jump from the year before. And this wasn't just some lucky break. It was driven by really strong production meeting some pretty favorable metal prices. That means way more cash was flowing into the company right from the get-go.
But, revenue is only part of the story. The real shocker, the part that makes you go, whoa, is on the bottom line. Their net earnings just exploded. I mean, they went from around $77 million to over $568 million in 1 year. That tells us something really crucial. They weren't just making more money, they were becoming wildly more profitable. And the success was just everywhere. Beyond that record EBITDA we kicked things off with, they also hit a record for free cash flow. That's the actual cash left in the bank after you've paid all the bills, and they used that strength to pay down a big chunk of their debt, which made the whole company a lot stronger financially.
Okay, so you see these incredible financial results, right? And the obvious question is, how? How'd they do it? It really boils down to two things that every great industrial company is obsessed with: running your machines really, really well and keeping your costs super low. This quote, it kind of says it all. For 11 straight years, they've delivered exactly the amount of copper they promised the market they would. Just think about that for a second. Even with major curveballs like wildfires up in Manitoba, they still hit their numbers. In the crazy world of mining, that kind of consistency is just so rare, and it's the bedrock of their whole operation. Now, let's talk costs. Every mining company lives and dies by something called cash cost, basically what it costs them to pull a pound of metal out of the ground. And this is where Hudbay has a secret weapon. See, they mine valuable stuff like gold right alongside their mining product, copper. And when they sell that gold, the money they get back can actually be more than what it costs them to produce everything in the first place. I mean, can you imagine? You're effectively getting paid to produce your main product. It's a massive, massive competitive advantage. So the crucial takeaway is this simple little formula. When you combined consistent, reliable operations with rock-bottom costs, any little bump in metal prices goes straight to your bottom line. That right there, that was the engine that drove their record-breaking 2025. But here's the thing about smart companies, right? They don't just celebrate a record year and call it a day. No, they use that success to build for the future. And for Hudbay, that future is all about one metal, copper. And this brings up one of the classic challenges in business. You have this huge, really promising project. In this case, it's a copper mine in Arizona called Copper World, but it costs an absolute fortune to build. Taking on a mountain of debt is super risky. So, what do? You find a partner. Hudbay's answer was something called a joint venture, or a JV. It's a really clever strategic deal where you bring in another company to share the costs, share the risk, and of course, share the eventual rewards.
And here's how that plan works. It's actually pretty simple. Hudbay, they brought the project to the table. Mitsubishi, a massive corporation from Japan, brought the cash. They invested $600 million for a 30% stake. And just like that, Hudbay got the funding it needed for its mine of the future without putting its own finances at risk. It's a textbook way to de-risk a giant project.
Okay, so we've got record profits and a brilliant strategic move for the future. The story sounds perfect, right? But this is where we have to, read the fine print. Because as good as 2025 was, it wasn't totally flawless, and the market definitely noticed. On one side, the good news is crystal clear: record earnings, a solid balance sheet, that super smart JV. But on the other hand, you have the headwinds, the cautions. You've always got operational risks, and the fact that metal prices can go up and down. But there's one little item on that list that's super interesting, because it explains so much: missed EPS forecasts. And this leads us to a really important question. If the company is posting these record profits and setting itself up perfectly for the future, why wasn't Wall Street throwing a parade? Why was the reaction, as our source material puts it, mixed? And the answer comes down to one of the most fundamental rules of the stock market. It's not always about reality, it's about expectations. Hudbay's performance was fantastic, no question, but their earnings per share for the fourth quarter came in just a tiny bit shy of what the expert analyst had predicted. And in the eyes of the market, even a record-breaking year can get dinged if it doesn't quite meet that magic number.
So let's zoom out and put all these pieces together. When you step back and look at it, what's the big picture takeaway from Hudbay's really remarkable year?
This timeline really shows you the whole strategy in motion. 2025 was all about generating that cash and fixing up the balance sheet. 2026 is about using that newfound strength to get the permits for future growth. And it's all building towards the late 2020s when their huge Copper World project is set to totally transform the company's output. You can see how each step is designed to set up the next one.
And that, right there, is the real story. The record profits of 2025 weren't the end goal. They were the fuel. The fuel to lower risk, to fund growth, and to pivot the entire company towards a future that is centered on copper. Which leaves us with a final and pretty fascinating question. All of this, the operational excellence, the cost control, the smart partnerships, it's all in service of a massive bet on copper. You know, the essential metal for electric vehicles, for renewable energy, for the entire green transition. They've built the foundation. Now we just get to see if their timing is as good as their operations.